Alright folks, welcome back. This is episode 26 of the ICT Mastery Mentorship. In this episode, we're going to be going over power of 3 and or accumulation, manipulation, and distribution. What is power of 3 or what is AMD? That's the abbreviation for power of 3. AMD or power of 3 is 3 phases, as I just said: accumulation, manipulation, and distribution. Now, if you pay attention to what each of those words mean, accumulation basically means consolidation or buildup of something. In this market, whenever we have an accumulation or a buildup of something, that buildup is what? What do you think that buildup is? Just take a wild guess. It's liquidity. Okay, it's liquidity. Because what is moving these markets? What is within these candles? Yeah, it's price fluctuating, but what are being placed at these prices? What is being placed at these prices? Orders. And what do orders have in them? They have liquidity. What is liquidity? Funds. Duh. Money. Duh. Euros, Swiss franc, US dollar, the Japanese yen, doesn't matter. Anything that's a currency that is sent into an order, the fund becomes an order, or the funds become an order. The order becomes liquidity, and that liquidity is used to move the market. Very simple. It's not hard, right? So, accumulation looks like this. Want to draw it? Sure. Back and forth, 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 back and forth. That's accumulation. Now, it can also do it like this, too. It can go up and accumulate. Now, I'm going to teach you what this exactly means and what's happening here. Okay, I'm going to teach you that, too. Then it can also do it like this. It can also drop down and accumulate also. So that is accumulation. So something like this. See that? Just moving back and forth, not going anywhere. It's just stuck in a range. That's accumulation. Manipulation is, for example, let me show you this example. This happened today, actually, and I made such a, not necessarily a huge mistake, but it was a very minor but critical mistake that I could have avoided if I just, took notes. Anyway, let's look here. The type of accumulation we have is a bearish accumulation. Price is accumulating while going lower, right? It's dropping lower and accumulating. So there's two things that is happening here. Price is, one, purging sell side liquidity and leaving buy side. It's accumulating buy side but purging sell side. So you're probably like, okay, if it's purging sell side, isn't that manipulation? It is. But look here. You just have to look. You have to go in depth a little bit, okay? Because, yeah, we can just from zooming out and looking here and not really zooming in, yeah, we can see it's coming down and purging sell side. But in this area, look what price is doing. We're going to zoom in so I can show you exactly what I'm talking about. This is why I need to zoom in and investigate price. Okay, got to interrogate it. Out of this whole consolidation, right? How many lows did we break? 1, 2, 3, and then around here is when we stopped. We started building up sell side liquidity. 1 point of sell side, 2 point of sell side, 3 point of sell side, and then guess what? We got equal lows down here. See that? So we have a bunch of sell side being accumulated here while it's being purged, while buy side is being accumulated. So since we have, let me X out of that. Since we have sell side is being accumulated and we're leaving buy side, right? There's two things that can happen. We're accumulating both sides of the market, buy side and sell side. There's two things that can happen. Price can either drop lower, then head back higher as manipulation, or manipulate higher, then drop lower. Okay? That drop lower following the manipulation, or for example, since price dropped lower today, we should see price distribute higher, in which it's already doing now. So this would be its manipulation. That's what we're doing first. Now you're probably like, how would we find the manipulation? How are we going to do that? There's a lot of confluence here. There's a lot of stuff. Most of the stuff that's here, you don't know, which is totally fine. That's totally fine. But for example, right? First of all, we have this SMT here. If we switch between it, see that? Oh, spoiler. Anyway, we have this SMT right here between this high and this high. So what's that? That's a bearish SMT. So if we switch back and forth again, hold on. See it up there? Let me zoom in so you can really see it. Hold on. It's right there in the corner. Wish I can really zoom in on it so I won't glitch out. But yeah, you see it. You get the point. It's right there. Yep, there you go. Now you can see it. Ah, there you go. See the SMT? So one, we have a 30-minute, well, really a 4-hour SMT. 4-hour bearish SMT with a 30-minute run on buy side liquidity right here. This is buy side liquidity. Then we failed to take out this point of buy side liquidity right here. So like I'm not going to buy side. So we took out these relative equal lows here, stayed within the current dealing range, which is from here to here, This is what we're trading in. This right here. Pull it all the way up. So we're staying within this range. Okay. And when I say staying within this range, we don't want to break out of it higher. That's what we're seeing from price. We don't want to break out of it higher. And even here, we're violating supporting PD arrays. If we wanted to see price go higher, we are violating the PD arrays that would support that narrative, which is this bullish order block, or this fair value gap, or this other fair value gap that's here. There's a lot of PD arrays that's being disrespected, showing that price is going lower. So in the future, once you learn enough confluences to where you can actually predict the manipulation, that's how you're gonna get your anticipate. I still cannot say that word, bro. Hold on, man. Let me just. Hold on, dude. Hold on, give me a second, man. I can't even spell the word, dude. Hold on, guys. Hold on.
Anticipation.
Hold on, let me just.
Anticipation.
Oh, anticipation. Okay. That's how you get your anticipation on price by using external confluences to, get your, let me say it again, anticipation on where price is going to manipulate. There we go. I got it. You're never going to hear me mess up on that word again. Anyway, but just from using little stuff like this, even this order block here. See that? Look at that. Price is respecting that order block. Nice, isn't it? So we got one tap into it, second tap into it, third tap into it, fourth tap into it. Has price ran away yet? Nope, it hasn't ran away from it. So it's still referring to it. Once it runs away from it, then it's gone. But it hasn't, really displaced away from it. You get what I'm saying? Anyway, let me start on the 930 opening, which is right here. There you go. So now we got our 930 openings. I need to move faster. Let me stop moving so slow. Anyway, we have that liquidity purge, failure to take out this point of buy side liquidity here within, which is actually, the high of the current dealing range that we're trading in. And then we have the respect of this order block. So where's price obviously going? Obviously going higher, right? And then we have this bearish break in market structure right here. See that? Got the purge of buy side, got relative equal highs, comes up, purges it, comes back down, displaces below this low, break in market structure, retraces back up to this fair value gap, respects it, drops lower, creates relative equal lows down here. So what's going to happen now? Are we showing confluences that we want to go higher? No, we're not. So when that 930 opening kicks in, what should happen? We should drop lower for the day and manipulate for the week. Okay. You will learn. What I just said is probably gonna that sounded very important. It is. It's very important what I just said. It's gonna distribute for the day, but manipulate for the week. You're gonna learn what that means in the future. Okay. But overall, if we're just looking on this time frame, price is manipulated. This is not the true narrative. This right here, for the day, yeah, that's the narrative. For the afternoon, not afternoon, but for the the afternoon and for the AM session, that is the narrative for price to drop. But for the overall market narrative, like just no time being involved, the narrative is for price to go higher. Period. So what price is currently doing is it's manipulating. It's all it's doing is manipulating. And in that manipulation, we are reaching a deep discount. Whoa. JJ's whipping out the other concepts, finally. Hasn't reached OTE. Got close. Well, we visit a discount. I think we hit some sort of order block too, did we? Hold on. Let me see. Yeah, we did. We hit a old order block right here. Yep, this order block right there. We hit that. Respect to this equilibrium, and now we're distributing currently. So you get the point. Manipulation is very easy to anticipate once you have the confluences to actually anticipate it. It's very, very simple, but this is just one example. We haven't even gone to the distribution part. So you understand accumulation and manipulation and what it is, but now we actually have to go through the whole entire thing. So let's go to this example here and turn off the 930 openings. Here we are. Pull the screen down. Jesus. All right. Now this is a upwards accumulation. Okay, price is accumulating higher. It's accumulating sell side liquidity, purging buy side liquidity. So whenever you have a consolidation like this, and it's just purging one side, accumulating the other side, it's pretty easy. It's pretty easy to spot. Reason being, it's taking out all buy side, wiping it out, and it's accumulating. Okay. Let me simplify this. Okay. Whenever you have a directional accumulation, meaning the accumulation is going up or down, that's what I mean by directional. In this case, this is a bullish accumulation, right? What's happening here is it's purging buy side liquidity. And whenever it reprices back down into the accumulation range, well, what do you think is happening? What do you think is happening? What's happening is when it takes out this level here, boom, that's your liquidity purge. When that happens and price reprices back into the accumulation range, it is taking those orders that were there, the buy stops, whatever, the stops for sale orders, all that. Once it takes that out, it's going to inject it into this accumulation. It's going to redistribute it and accumulate it into this range. So when price is ready, it can distribute all of the injected buy side liquidity that was built up here. Pretty cool, isn't it? So it does this multiple times, by the way. Like, look, even here. Let me highlight it. We got one here. We got another right here. You see what's happening here? Price takes out buy side, reprices. Takes out buy side, reprices back in. Takes out buy side, comes back in. So every time price does this, whenever it's in a directional consolidation, it is taking those orders that are being purged, right, and injecting them back into this accumulation, adding more to the accumulation already, because price is already accumulating sell side liquidity. It's already doing that. So what's happening? It's I guess you could say it's supercharging its manipulation. It's really supercharging the magnitude of the moves that are about to be in play. Okay, I'm going to say this one more time because this is very, very important. Price is heading higher. It's accumulating higher. Okay, so what's happening here? Buy side is being purged. Every time buy side is being purged, okay, price is injecting the liquidity that was resting above that level of liquidity back into the accumulation. So when the manipulation occurs, the magnitude will be higher, quicker, and the distribution will be the distribution's magnitude will be higher, quicker, and even a larger move of the manipulation. And watch this. You're gonna see just in just a second. Look at all this sell side we're accumulating down here. Sell side, sell side. And guess what? There's another form of sell side over here. You don't know what it is, so don't worry about it. You don't know what this form of sell side is, so we're not even gonna talk about that. But anyway, we're accumulating sell side liquidity, right? I talk way too much, Jesus, but it's some good learning. I will tell you that. So we're accumulating sell side, and when we manipulate, where should price manipulate to? It should manipulate lower. Why? Because right off the bat, the directional swing, it gives you the indication that, oh, we know where we're going. But if it was just back and forth like this, hold on, if it was just like this, like just straight sideways, no direction with it, that's when you're going to have to start using other confluences, okay? But whenever you have a directional swing like this, the confluences are already in place for you. It's already in place. Whichever side is purging, it's just going to manipulate to the other side. It's purging buy side, so which side should it manipulate? It should manipulate sell side. It's not hard. Okay, so I just gave you a huge tip on accumulation. So put that in your notes. Make a mental note of it, whatever you got to do to make sure you remember that. Or if you want to click off this video and even go check it out for yourself, study accumulations for like 15 minutes, then come back. You can do that also. Whatever you got to do to keep it in your head to remember it, okay? So what happens now is the manipulation phase occurs. Price manipulates all the way down into the both levels of sell side liquidity, okay? And these are very important levels. This level here is very important. You're going to learn that soon. This is a institutional level. This is advanced market structure right here. You're like, where? I'm not going to show you. You know what? I'll give you a little teaser. We're going to go over in 2 more episodes. That right there is where we're going to go over this swing right here. And you're going to find out why exactly this is super, is supercharged. But we got a short-term swing here, short-term swing here, and then in the future, you would know what this is in 2 more episodes. Anyway, price comes down and takes out both of those lows. So what is this now? This is now liquidity purge. But I thought this was a liquidity purge. Yes, this was a liquidity purge during the accumulation because we're sending or injecting all the orders that are not within, but are at these highs, or you can still say it's within because they can be around a high, but are within the high, back into this accumulation. So when price manipulates, it manipulates good and well. And does it do it good and well? Yeah, barely any pullbacks at all. It just straight drop down into it. So once that happens, and we've manipulated lower, where should price distribute to? It should distribute higher. Yeah, it should distribute higher. And does price do that? It does do that. Now, here's one thing I'll say to you. Is the distribution thicker? Did I just say thicker? Is the distribution have a higher magnitude than the manipulation? It does. How do we know it's going to do that? How do we just know, like, oh, the distribution is going to be bigger than the manipulation? You remember the directional accumulation? It's because of this. This right here. And this right here. That's the reason it's doing that. All right? That's the whole reason it's doing that. So what it's injecting all the buy-side liquidity that's resting here back into the market. So when it's ready, it can distribute it good and well. Okay? It's nothing hard, folks. You know, we're gonna go over this one more time because I don't want to make this too long. But these are some good examples just on in itself, right? I'm gonna go over this one more time. All right, I'm not gonna make this too long. In this bullish directional accumulation, price is purging buy-side liquidity. It takes that buy-side liquidity, okay? Because that's why it's called a purge, because price is purging that buy-side liquidity. What it's going to do with that purged buy-side liquidity is inject it back into the market. Now, once it's in the market, or once the algorithm has a grasp of it, what is it going to do with it? What's it going to do with it? It's going to leave it there. It's going to leave it there and use it to manipulate sell side. So once you manipulate sell side, what's going to happen now? Well, what's with the buy side? What happens to the buy side? The buy side has been used. How? Because it's kept it into the market, so when price manipulates, it can use that buy side liquidity to manipulate lower effectively. Does it manipulate lower effectively? Yes, it does. So since we manipulated lower effectively, price can now take out sell side and inject the sell side back into the market to then distribute higher effectively. Get it? This is easy stuff, man. I'm glad I'm teaching you this stuff because it's really helpful, especially for me. I'm going over this now, and I'm starting to realize how just amazing these concepts really are by themselves. But that doesn't mean use the concepts by themselves, okay? But anyway, even this example here, where after this, I'm going to end this episode here because this is already too long. Price is accumulating. We at the end of the accumulation, we built up buy side and sell side, but within the confluences here, the confluences showed us that we wanted to manipulate lower into sell side first. So when we manipulate into sell side, price is going to inject that sell side back into the market. That's why it's called manipulation. It's going to inject that not that buy side, but the sell side back into the market. So when it distributes higher, it can distribute higher good and what? Good and well. And then even here, when it does manipulate, it can, not it can, but when price manipulates, it's going to be referring to something. Keep that in mind. It's going to be referring to first liquidity. That's just a guarantee. It's not going to manipulate for no reason. And that primary reason it's manipulating is because of what? Liquidity. That's the primary reason it's manipulating. Second reason is it's going to refer to some sort of reference point to provide you I forgot the market efficiency paradigm, but you, the smart money concept trader, and to give you the opportunity in the heads of like, hey, we're about to go back higher. And it does. That reference point being the respect of, what's that? The equilibrium of the current dealing range you're trading in, and the respect of the equilibrium of the order block. You're gonna learn what this is in a minute. I just dropped sauce by accident because, man, I need to stop leaking sauce, man, because I can't do that for you students. It's gonna confuse you. Anyway, this is a good episode. I hope I taught you Power of 3 well. Okay, a bearish example would just be price. I didn't go over a bearish example, but it's literally just vice versa. Okay, price can either be accumulating sideways just like this, or it can be accumulating down like this, or it can be accumulating higher like this. Okay, so I just showed you how to read it if it's accumulating lower or accumulating higher, but it's the opposite for if it's accumulating lower. Okay, it's it's purging the sell side to inject it back into the market to use it to manipulate higher. Once it manipulates higher, takes out the buy side. This is a bearish power of 3 because the distribution is bearish. Once it manipulates higher, takes out buy side, it's going to inject that buy side back into the market so it can distribute lower effectively. Simple, right? Yeah, pretty simple. Anyway, I'll be in this episode here. Not going to make it over 20 minutes, and I'll see you guys in the next one. Good luck and good trading.